Mark Tepper, you've been on this from day one in terms of the expectations for office space to continue to get dire. Was it Howard Lutnick was on this program last year, said he's expecting $800 billion in defaults?
You know, it's possible. I mean, look, commercial real estate, specifically office space, is highly challenged right now. Not only do we have this building in Fort Worth, Texas, but Maria, I've told you about the second largest building in Cleveland selling for 1/3 of what was owed to the bank. There was a building in St. Louis, I think within the last month or so, that in 2006 sold for $200 million that just sold for $3.6 million a month ago. So when you look at commercial real estate, you've really got, two major challenges. Number one, if you're a business that pre-pandemic needed 10,000 square feet of space, you probably need 3,000 to 5,000 nowadays because of the whole virtual work thing. And then secondly, I mentioned this last week, but 43% of small businesses in April struggled to pay their rent. They could not afford to pay their full rent. So you've got those two huge challenges, which are certainly weighing on the owners of these buildings.
That is crazy. 43% couldn't pay their rent.
Yeah.
Yeah, that's, unfortunately, small businesses are not doing very well. They've got some challenges. People really only see what Fortune 500 companies are doing because you follow the stock market. But man, oh man, small businesses, that's 45% of our economy, 45% of the private sector jobs. They mean a lot.
Yeah, and they've got the double punch of not just the interest rate story and the impact of higher rates, Liz, but also the impact of higher regulation from this administration.
Yeah, all of that is really hurting small businesses and, by the way, big businesses, Maria. But I think what's troubling about the commercial real estate industry right now, I think there's $1 trillion in loans that have to be refinanced. Almost none of those properties are probably worth what they were when they initially were financed. The problem is it's very idiosyncratic. You can have one building that's worth 75% of its loan value, another maybe 20%. And the problem is for Wall Street, you look at this and you really don't know who's going to be impacted. Some small banks clearly are going to have some problems, but, it's a little bit of a black cloud out there, and they just don't know how it's going to fall out.
Yeah, Cheryl.
Well, I think you're going to see more examples of the one that I brought you just this morning from Texas. Even just several months ago, we talked about two large office buildings downtown Los Angeles, and those went into bankruptcy. I think that you're going to have more of that. And Liz mentioned those small banks. That is where the shoes, I think, are still going to continue to fall, unfortunately, because if you look at the earnings reports that we got from some of these smaller firms, they say that dark cloud is still hanging over them. And if interest rates in general, which are still above 7% right now, continue in that area, and we don't see any reason why they're not going to, that just further compounds the problems for these smaller banks. It's a very difficult situation.